please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Let us also welcome someone whom we haven't spoken to in a goodish bit and who today is a celebratory figure, especially in the United States. JSW Steel has proposed to invest $1 billion to modernize their Texas and Ohio steel mills with an intention to further augment the combined capacity JSW USA to 4 million tons per annum. And that, of course, has invited a lot of congratulations from the biggest of US policymakers, from the US President himself. Seshagiri Rao, Joint MD and Group CFO of JSW Steel, joins us now. Good morning, Mr. Rao. Thank you very much. Sounds against conventional wisdom, isn't it, to be investing in the United States, especially when you have such a big stake in India. Wouldn't it be basically per unit more expensive?
No, while we are expanding in the Indian markets, as you know, by almost close to 7 million ton in the next 2 years' time, which is over 40% of our existing capacity in India. We are also looking at overseas global footprints. So we find very interesting opportunities in the US and Europe. After having seen the asset that we have recently acquired, that is in Ohio, it is a 3 million ton steel plant with an integration to the extent of 1.5 million ton. So that we could acquire at a total cost of around $180 million. Another $50 million is required for restarting the plant. So with $230 million investment, a total facility of 3 million ton is available with 1.5 million ton full integration. I feel it is very value accretive to the JSW Steel shareholders. Considering the inherent turnaround in the US in the investment cycle, we expect that it is a very good investment from our side. Similarly, if I look at the Baytown facility of plate and pipe mill, which we acquired in the year 2008, now we are seeing the demand coming back. So we wanted to integrate backwards and also modernize our plate and pipe mill. So with that, it becomes a 1 million ton fully integrated facility, having a very good potential to make money in this plant. So I think these two investments together, we are investing close to $1 billion and we will have a 4 million ton presence in the US market. I think it is very, very value accretive in my view to the shareholders of steel.
Yeah, Mr. Seshagiri Rao, I mean, this is just probably a lay question. With that kind of, your facilities in Ohio, would you be largely servicing US demand? In terms of per unit, if you're exporting, would not the Indian facilities be more competitive than US facilities, or are they entirely different products?
It is a similar product, but if we look at the process through which the steel is made in the US, in these two facilities is different. It is not blast furnace steel making. It is electric arc furnace, scrap based. So it is a model like new car model, where that new car continues to make money notwithstanding the cycles.
Yeah, but you will sell it only in the US?
Available within the US.
You will sell it only in the US?
It will be, there is a good, yes, it is intended for US markets.
Okay, and how do you plan to fund this entire investment, this total 4 million ton expansion that you're planning? How are you going to be doing the funding?
Baytown facility, total $500 million investment. Out of that, 150 million we are putting in equity from India. Balance $350 million we have already tied up by way of funding from global banks. Similarly, in the case of the Ohio plant, total investment, as I mentioned to you, is around $230 million. Out of that, $100 million we are raising loan, $120 million we are raising the loan. Balance is by way of equity from India. We have also tied up the funding for Ohio facility.
Okay. Instead of putting Indian equity abroad, won't, buying distressed Indian companies make more sense?
Investing in the US does not mean that we don't acquire in India. So we continue to look for opportunities in India. As I mentioned to you, in India, the way we are expanding is that 40% incremental capacity is coming in the next 2 years' time. This is only upstream. Again, if I look at downstream, we are almost doubling our downstream capacity. So there is a 45,000 crore investment we are making in India particularly where Indian steel demand is growing at a rate of 8% plus. I think it is the time where JSW Steel is investing for the last 3 years, where these capacities will come into operation in the next 2 years' time. I think we are in a better position to leverage this India's growing demand.
Is it true that you are going to look to bid for ArcelorMittal's Galati unit in Romania? I mean, are you interested in that asset?
This we have already clarified that we have not looked at that facility.
Okay.
But at the same time, as a strategy for JSW Steel, we are looking at our presence in the steel manufacturing, both in Europe and the US. So we continue to look for opportunities.
Okay. Well, what's the plan with respect to Monet? Will it finally be integrated into the company, merged into JSW Steel? If you can draw out the future over the next 2-3 years?
The resolution plan submitted by the JSW Steel Consortium has been approved by the creditors. It is pending with the NCLT. So once NCLT approves, then we will be able to share more information about Monet.
Okay. Any timeline? I mean, is it due very soon?
We have no idea when it can happen, but the hearings are happening. I think next hearing is scheduled, I think, on 6th of July.
Okay. Well, sir, now let me come to your domestic business itself. The quarter is almost over.
Yeah.
How has sales looked year on year? And more importantly, margins. You have the advantage of a weak rupee.
We have given the guidance of total sales volume of 16 million ton, which is approximately 3% growth. So we are on track. We will be able to achieve our guidance both in terms of production and in terms of sales. As regards to the overall demand, I think is quite strong. It is picking up momentum. If you see last year, the growth in demand was around 7–7.5%. If you see in the first 2 months of the current financial year, it is growing above 8%. So it shows clearly there is a very inherent demand that is coming back in the steel sector. When the demand is growing at around 8%, whereas production has grown only by 6.6%. So therefore, Indian steel demand is quite robust. That is one. Number two, prices are stable in the global markets, majorly driven by 2 factors. One factor is structural, like Chinese ultra emission environmental upgrade plan that is increasing their cost of production by almost close to $50 to $60 per ton. That is number one. Number two, everybody anticipated that the global steel demand in the current year will be only 1.8%. Whereas if you see the apparent steel consumption in China in the first 5 months of this year, it is almost close to 9.5%, which clearly shows that even global steel demand is quite strong. So taking these two things into account, one is the Chinese structural changes that are happening where their cost of production is going up. Number two is the global steel demand. These two together keeps the steel prices at the current level, if it doesn't go up. So taking these two into account and also the local very strong demand, prices are stable.
So just coming back to that expansion that you were talking about in the US and the money that you would have to raise, what would all of this do to your overall debt? I mean, currently your debt stands at a little less than 40,000 crores. Will it move higher in the years to come?
We have been guiding about our financial ratios. If you look at as on 31st March 18, I think it is one of the very few strong steel companies with very good balance sheet. So we had a debt to EBITDA of 2.67, our debt to equity of 1.24 as on 31st March 18. Last year, in fact, we have reduced our debt by more than 3,500 crores. So with that balance sheet, we don't anticipate any big problem in raising the funding. But overall ratios, if I look at it, we have guided at 3.75 debt to EBITDA and 1.75 debt to equity. Within those ratios, we continue to grow our businesses.
Okay. Well, 2 quick questions on inorganic issues. Anything else in this IBC space that you are looking at in power or steel? And secondly, JSPL's power, I mean, what's the latest over there?
As regards to steel, in the out of 5 cases, we are there in one of the cases, like Monet that is pending in the NCLT. Another case of SR Steel In the second round, we are an investor along with New Metal. So that is also under litigation. As and when it is decided, I think we'll be able to say more about that. Other than these two, in the other 5 cases which are there in the round 1, we are not there in other 3 cases.
Power, sir?
Sorry?
Power units, any of them?
Power, I think there is a separate team which they will be able to comment on that.
Okay. So JSPL's power unit also is not something that you take an interest in. It would be with JSW Energy.
Yes, JSW Energy will be able to comment on that because they have done the transaction.
All right. We will look forward with interest to how the steel units in IBC also evolve. Thank you very much, Mr. Seshagiri Rao, for joining us today, and congratulations once again for your investments in the US as well. Okay,
right. So well, let's move on. A recent Julius Baer report expects the global economic backdrop to remain a bit robust, though it does see renewed weakness in some emerging economies. Julius Baer is also increasing their equity market exposure on the back of an expectation that the bull market looks good for more. But what about India? Mark Matthews of Bank Julius Baer joins us now to talk about that. Mark, good morning. Just start off by telling us what your basic view is on the world equity markets, and then tell us how you're approaching India, given the context that we have a lot of hurdles, be it crude, the political uncertainty, etc.
I think right now we're in what I would call a summer storm. There's about a half a dozen things that have happened to discombobulate the markets. Number 1, the trade war. Number 2, the rising interest rates and therefore the stronger dollar. In the emerging markets, there are people like Erdogan in Turkey and Obrador in Mexico who aren't so friendly to the global markets, let's say. And a credit crunch in China. So this has all caused the thing that we're experiencing now, which is a fall in markets. And we're entering into what is seasonally a weak time of year anyway. The summer months historically are the poorest performers. So I do think that we coalesce at best throughout the summer. With regard to India, it actually looks good in this context because, number 1, there is no real component of India in this trade war. India is not a big exporter and it benefits from the weaker rupee. The NPAs are being addressed. Foreign investors like that, and I think they're probably over the hill on that one. The oil price rise is not good for the country, but at least we can see the government is not subsidizing it. There was a concern that it would do that. Earnings growth of about 15% is very decent. So I think the backdrop on India looks quite favorable. The only issue that I think people increasingly have in light of the Karnataka election is what the general election might look like next year. Because what we saw in Karnataka is that although BJP got the most votes, the opposition was able to cobble together a viable coalition. And if the opposition countrywide can figure out how to do that on the national stage, then I think increasingly foreigners are worried we might not have a BJP government, and instead we'd have a coalition of a very, very wide range of parties, which would be ineffective in its governance.
Okay.
But at present, I wouldn't put over 50% probability on that.
Okay. Mark, good morning. So is that the bigger risk for India, or is, you know, for example, crude oil surging towards, say, 90 or 100 a bigger risk for us?
Well, that would obviously take a bite. I mean, if we got to 90, I'm not sure perhaps the government might have to oblige the oil marketing companies to bear some of the brunt, and of course if they don't, the consumer would. But I actually am not so sure that oil will go to $90. I think that what we can see now, in fact, is a little bit of weakness in the most recent economic numbers globally, and the bull case for oil really was that demand would remain very, very strong. But as a result of you know, the trade war talk and the talk about a credit crunch in China, I forgot to mention There are concerns in Europe that Merkel may not survive in Germany. So if all of this kind of dampens business and consumer sentiment, I think that could take the edge off of oil. So I wouldn't worry too much about oil going to 90, but I think it can stay around where it is now.
Okay. Good morning, Mark. You're in Delhi. It would have been so much better if you had been in Mumbai and in our studio, and we hope to see you sometime soon in the studio itself. But you know, in India itself, are you hands-off India at this point in time and just biding with the investments you already have, or are you dipping in? If yes, in what sectors?
Well, I must confess that we haven't really changed our allocation in this market for a long time. It's a structural overweight for us. It's a buy and hold market. And I think that the case is very simple. It's a large emerging market with a good growth trajectory and well-run companies. So it's worth buying and holding that kind of market over time. If I could speak more broadly about foreigners, I think what's encouraging is that they've sold only about $1 billion worth of Indian equities so far this year. If you remember 10 years ago during the global crisis, there were massive outflows from India, and we're not seeing that this time. And in fact, I'm noticing that there's been quite a bit of foreign appetite for some of these recent IPOs like Rights and Varroc and Bandhan Bank. Yeah. So actually, I think the foreign appetite for India, it's not going to increase, but I don't think you're going to see a mass exodus from here either. Maybe a little bit like what I said about ourselves. We'll just stay put.
Okay, that's interesting that you mentioned Rights and Varroc. I mean, you know, that's drilling it down to the micros. But since you are in India, any interesting companies, managements, corporates that you've been reaching out to, anyone you've met recently, any themes that you like, that, you know, you think could do well in the long term?
Well, I must confess, I arrived late last night. I just had my idli for breakfast, and you're the first people I'm talking to. So I probably should have talked to you 3 days from now.
Okay. You're most welcome to speak again, and we will try to see if you can find some time for us. But what is the incremental interesting story in India? You spoke of Bandhan Bank. So would, you know, NBFCs and private sector banks, besides the one that are, of course, well priced, interest you?
Absolutely. No, I think the banking sector is a good sector to be positioned in here. As I said, I like the way this current government has approached the NPAs. They need to be resolved. It's painful in the short term, but of course it cleans up your balance sheet so then you can do more lending long term. So I think the banks are a good place to be. The consumer remains a good place to be, and even some of the big and expensive infrastructure companies like Larsen & Toubro, I think are actually not too expensive based on their earnings profile and the results that we've seen in the most recent quarterly period. So there are a lot of things that are worth owning here.
All right. Mark, thanks a lot for joining us. Have a good trip in India, of course, and we'll talk to you soon. Okay, for now, let's shift focus back to the market because it's now recovering from the morning lows. The market has made a bit of a move on the upside. Sensex is up 73 points. But, you know, in this kind of market, that's enough. From 20 points intraday move, I think smart traders would be making decent money. Let's do one thing. Let's get our technical experts back. Ashwani Gujral and, of course, Sandeep Wagle is with us. Ashwani, thoughts on the index? Again, you know, in a tight band, but making a bit of a move. Your thoughts and stock calls now?
See, it's again, you know, quality stocks which are moving higher. HDFC Bank, Reliance, TCS. So, you know, if these guys are up, it's very difficult to take the market lower. HDFC Bank is now hitting fresh highs, and also I think even HDFC. So chances are Bank Nifty could move up from here. So we are now long on the Bank Nifty. On other stocks, I think consumers are coming back in a very strong fashion. So HUL and Bata and all of these guys moving higher. Jubilant Food also doing well. So there's a select bunch of these 30-35 stocks which should keep you safe. I think the way large caps are moving, whatever deficit you know is there because of mid caps could really get eaten up. So right now you should be more long than short. Having said that, I think IT rally is kind of taking a break and will probably start again. And Hexaware is a buy with a stop of 470, target of 484. RIL is not breaking yesterday's low, in fact, is recovering from there. So given that, I think that should gain momentum as we go towards the close. And finally, Bata can still be bought. That is a buy with a stop of 850, target of 875. But anything consumer, tech, and large banks, HDFC Bank, etc., they can be bought for the day.
Actually, Motherson Sumi seems to be listening to you. Around 280, is it at the moment? Is there a trade positional?
Like Mr. Sehgal would say that, will people stop driving cars? If you've understood Trump, he takes these wide positions and gets people to the negotiation table. So this has to be used by traders to buy when, quality companies come off. Will entire trade, global trade, stop happening? So I don't think, these are, very valid reasons to get stocks lower. So my sense is that this is the time you should start buying into it.
Okay. What about a stock like RBL Bank? I mean, just wanted your thoughts there. For the slightly longer term, do you think that this deserves to see high levels? I mean, it's hit a new high today.
See, it's recently shown great amounts of strength, and possibly some amount of money coming out from PSU banks, etc., is going in there. So definitely it's a buy on dip, and that big correction that it had is probably done, and chances are it could move up even further.
Okay. Sandeep Agli is also with us. Good morning, Sandeep. What are you trading today?
Good morning, Lata. I would go with a buy in a RBL Bank, stop loss of 564, target of 582. The PSU banks are showing weakness. I would want to sell a syndicate bank. I see lower levels, stop loss of 43, target of 39.
Okay, Ashwini, I wanted your thoughts on a couple of stocks. State Bank, which is making lows of the day right now, and Tata Motors, which is trying to recover after that thrashing.
Well, State Bank is lower, but like 0.5%, 1% type of move. I think the bigger moves are in these consumption type stocks. I don't think State Bank or any PSU bank is now outperforming. Also, the problem is that all the news is out. So I don't think incrementally there'll be great downside, because Bank Nifty, if it starts to move up, then PSU banks also tend to see short covering. Tata Motors is very different from probably Motherson, because that was anyway in a bear market. So that should continue to move lower.
Okay. Gentlemen, thank you very much for coming by and giving us your 10 a.m. trades. For the moment, we shift back to value hunting. Our hunt for value today focuses on a leader in the media space. Mangalam is the one who tracks this sector very closely, is with us. What are you tracking, Mangalam?
Now, the stock on my radar today is Sun TV. It has declined about 12% this month, lost 25% of its market cap from record levels in Jan 2018. So what could have spooked this fall? Well, the first one was the continued loss of the company's share in TV channels, or their share in the TV channel's core market, which is Tamil Nadu. This is something that spooked the street. Remember, at the start of June, we saw numbers of almost 40%, which was a record low, and that recovered to about 44% as we speak. Analysts believe that this loss has come in from sustained competition from Star and Zee's regional offerings, which are about 40% of the market share. This is the key reason for the decline. Remember, this decline has led to a fears of lid on the pricing power of the company and lower than expected ad revenue growth, which after a spate of disappointment only recently has shown some sort of improvement. Remember, earlier it was showing a decline for a few consecutive quarters. So after this 25% decline in the company's share price from the record high, here are a few possible triggers that could perhaps reverse this trend. The first one, the company is tweaking its business model from selling slots for content to commissioning content, and a successful transition like that may perk up their ad revenue going forward. Secondly, benefits from digitization in Tamil Nadu are visible in their increasing subscription revenue growth, as well as the management commentary for the same. Remember, after the fourth quarter results, they said subscription revenue growth can grow up to 20 to 25% in FY19. The IPL business, the management expects that to turn into profit. Remember, they made a loss of 22.5 crores on the EBIT front last year, and this year, with the business model for IPL changing, it could enrich the company's EBIT by about 100 to 120 crores. That is what the street is estimating. The street will also watch out for Sun TV's performance in the new Tamil general entertainment channel that they've come out with, as well as their foray in other regional markets. Add to that, they're also producing a movie with Southern cinema behemoth Rajnikant, and while some brokerages have recently reduced their likeness for Sun TV, 7 still recommend buying into this stock. It will also be very interesting to see how the valuation differential between of about 30% plays out between industry leader Z as well as Sun TV, especially given the fact that the stock is politically sensitive, as well as this is the election year that we are going into ahead of 2019. But before I wrap, a quick disclaimer: this is not a recommendation for one to buy or sell the stock, just some research that I put out.
Yes, that's disclaimer is important.